Well, there's no surprises there. It's exactly what you would expect, but it's not a stimulus, it's a sedative. What stimulates the economy is less government. I mean, government is a big impediment to economic growth. The bigger the government, the less growth there is, because government has to be supported by the economy. And so it's a burden. It drains the economy of the resources that it needs to grow. And so instead of really stimulating the economy by liberating it from government, Biden wants to turn up the pressure by making government bigger and more expensive. So this is bad news for the economy. All that's happening is more money is being printed and being spent. That is not going to grow the economy. That will stifle it further. What's going to grow is the cost of living. It's going to get higher and higher. Prices are going to go up as the dollar loses purchasing power due to all the new money that the Fed prints to monetize all the debt the Treasury sells to finance all this spending. Well, it would push up prices. I mean, you have to remember there's a big difference between people earning money because they're productive and they're contributing goods and services to society, and people who are just spending money that the government prints. Just because people need money doesn't mean the government can provide it with them. If you need money, you have to provide goods and services in order to earn that money. But when you just print money instead of letting people earn it, all that happens is that the prices go up. And that's what's going to happen. And if the U.S. sends everybody $2,000, they're just going to go and buy stuff. But where's the stuff coming from? They're not helping to produce it. It's just going to run up the trade deficit, which is already at a record high. That's another thing I got right about Trump. He promised to shrink the deficit and win the trade war. I said that we would lose the trade war, and we did. Our merchandise trade deficit is the highest it's ever been. Our trade deficit with China in particular is at an all-time record high. And so if we just take these stimulus checks and buy more goods manufactured in China and other places, it just increases the trade deficit, puts more downward pressure on the value of the dollar and upward pressure on the prices of all the goods that we're buying. Well, first of all, I don't think it's accurate. I mean, look at the import-export prices that just came out yesterday. They jumped by basically 1% in a month. Look, the government's inflation figures have never been honest. I think the metrics have been deliberately designed to obscure how high prices are actually rising. I think they would be rising much faster if it wasn't for the rest of the world bridging the gap between what we produce and what we consume through trade. But I think that's coming to an end. The Chinese and our other creditors are no longer buying U.S. treasuries. In fact, I think they're selling. So the subsidy that Americans have enjoyed from foreign producers and savers is going to go away. So I think we're going to start to see much bigger increases in prices at the consumer level. How much of those increases get captured in a rigged CPI, it's hard to say. But you can already see commodity prices hitting 5-year highs across the board, whether it's industrial metals, whether it's agricultural commodities. I think by the end of 2021, we could see all of these commodities at all-time record highs. Meanwhile, interest rates are moving. They're still low, but they're moving up. And I think they have a lot further to go. And unfortunately, I think the Federal Reserve is going to do everything it can to prevent rates from rising because we're too broke to afford to pay. And that means they're going to have to crank up the presses even more, which will put even more downward pressure on the dollar and upward pressure on inflation, which is the reason that rates are rising in the first place. So this is going to be, a death spiral of inflation. Yeah, well, remember, gold rose above 2,000 earlier last year, so it hit a record high. It's now around 1850. I think it's, building and consolidating for the next leg up. As to why that leg hasn't already begun, I think you have a lot of traders who are still, using a playbook that really is irrelevant. They're looking at the rise in interest rates and somehow thinking that's bearish for gold. They're looking at the pickup in inflation and think, that means the Fed is going to be raising rates. And they're trying to discount that tighter monetary policy into the gold price. And I think that's completely ridiculous. The Fed is not going to be raising rates. It doesn't matter how high inflation goes. They're not going to fight it. They're simply going to stoke the fires. And, people are moving to other metals. I mean, they're moving to other commodities, and, they're not being distracted by the backup in rates. So I think this is just a short-term phenomena. I think gold is getting ready for a tremendous move, because in reality, if you're worried about inflation, gold should be the main commodity that you buy, because as inflation pushes up the price of all commodities, it's hard to store wheat or corn or oil or, live cattle. So if you think you need these commodities in the future, it's not that easy to stock up on them today. But what is easy to stock up on is gold. And gold is a store of value. It has historic relationships to all these other commodities. So if you're worried about a big increase in prices because of the valuation of money and you want to protect your long-term purchasing power, you would be buying gold. So gold should be reacting even faster than other commodities. And so it hasn't thus far, but I think it will. I don't know how much buying that might have gone into gold went into Bitcoin instead. I think it's, very little, as far as the size of the gold market. Maybe it's significant to the Bitcoin market, but I think it's kind of irrelevant to the gold market. What I do think may be happening, though, with the Bitcoin story, which is centered on the false belief that Bitcoin is digital gold and is going to replace gold. That's, part of the spiel that they use to try to sucker people into buying it, right? That's the Bitcoin story, that Bitcoin is gold, but it's nothing like gold at all. It has absolutely nothing in common with gold. But to the extent that some people that really don't understand what gold is, who maybe are in the institutional space, maybe they would be buying gold. But because they believe that maybe gold's future is being impacted by Bitcoin and that, maybe gold won't go up because Bitcoin will steal its thunder, it's possible that some institutions that otherwise might be buying gold maybe are not doing it. I don't think they're buying Bitcoin either, but to the extent that they think Bitcoin may replace gold, it may be a reason why they're not buying gold. And so maybe they're buying some other commodity, or maybe they're buying stocks or something else. But ultimately, Bitcoin is going to collapse, and any demand that it might have siphoned away from gold is going to return to gold. I mean, the Bitcoin story, it's one of a bubble. It's, a modern day tulip mania. It's fool's gold. I've said that from the beginning. It doesn't matter that the price has gone up. I mean, I've never said that the bubble couldn't get bigger or that the price couldn't rise. My only point is that the price is unsustainable because Bitcoin itself has no value. It has no use. Yes, if people believe the price is going to go up and they're willing to buy it, well, the price will go up.